And continuing his fight against inflation, the RBI Governor Raghuram Rajan stuck to the script by hiking the key interest rates by 25 basis points and cutting the overnight borrowing rate by 25 basis points. The governor maintained that he does expect action taken by the RBI in the last 1.5 months to help cool off inflation. And any further hikes will be dependent on the data. Let's listen in.
We've taken a couple of steps over the last month and with this policy action. And we believe that at this point, where we have left the interest rates is consistent with our projections going forward. Now, if our projections going forward and the data don't quite match, then we will be induced to take further steps. We haven't changed the goalpost as far as WPI goes, but we also need to bring the CPI under control. We can't live with close to double-digit CPI for an extended period of time. At this stage, in the evolution of that particular dialogue, I don't want to put a number out there and say this is what we plan to achieve by March 2014. What I will tell you is we want to bring it down from where that 9% estimate was.
Okay, let's also get in a word from on the RBI policy from Anirudh Ghosh, who was at the RBI.
Well, apart from the MSF rate cut and the repo rate hike, both of which, of course, were on expected lines, the RBI has actually sought to give more liquidity to banks by increasing the 7-day and 14-day repo auction limits by almost double. So earlier it used to be 0.25% of the bank's NDTL. Now that's been raised to 0.5% of their NDTL. But apart from that, not too much good news coming in for banks. They've also actually gone ahead and closed the repo window for mutual funds, which they had opened during the time of crisis. So clearly, they've actually said that going forward, the process of normalization of the monetary policy has now been completed, and also going forward now, all of their policy decisions are going to be really dictated by the growth inflation dynamic. And of course, at this point of time, given the fact that inflation is well above the RBI's comfort level, and also the fact that inflation is expected to rise from current levels, it really will warrant further policy action from the RBI, and that's exactly what both the Governor, Dr. Raghuram Rajan, has said, and also what has been said in today's policy statement, that clearly going forward, anchoring inflation expectations will be possibly the top of the agenda going forward. So of course, it does really point to a more hawkish stance. It also does point to a kind of situation where there are going to be higher policy rates and higher interest rates on the lending side for quite some time to come. So for borrowers, not very good news. As far as depositors are concerned, maybe there might be some amount of good news with higher savings rates coming in for some time to come.
All right, and moving away then, you also had Dr. C. Rangarajan, the chairman of the Prime Minister's Economic Advisory Council, speaking with us, saying that he believes that a 25 basis points hike in the repo rate by the RBI will be able to anchor inflation expectations.
It is very much along expected lines. So I think there are two components to the policy. One is the normalization of the extraordinary measures taken in July. Therefore, the MSF rate has been steadily brought down. On the other hand, there was a need, and there is a need to send out the right signal regarding inflationary expectations, and therefore the policy rate has been raised by 25 basis points. The compulsion to keep the rate of interest or the policy rate at a higher level is because that in the absence of an appropriate rate of interest, it does affect financial savings.
Let's also hear out what some of the bankers had to say about the RBI sticking to its script in its policy today.
Some rate changes could be expected, and view of the fact that, now which way and what, I think you should wait till the ALCO meets and takes a view on it. But having said that, I think, the policy has been very, very balanced.
Both the directions, movements have taken place. There's a reduction in one, there's an increase in the other. There is also, the step taken on the term repo. At the same time, you should understand that third quarter is always tight on liquidity as the quarter proceeds. So I think there are a lot of moving parts here. So one should, wait for some time and then see what exactly is the effect on cost of funds.
Cost of funds over the last 3 months would have gone up. This, as you rightly said, as we are going back to a normalized monetary policy, over a period of time, it would come down.
A little more availability of liquidity to the banks by increasing the repo, 7 days and 40 days repo limits from 0.25 to 0.5 has given the liquidity to the market which we were expecting.